Let's get it pumped up. All right. So we're going to watch the FOMC press conference. You can see there, basically, this is the news that came out at 2 o'clock. The Fed funds rate target rate is going to be kept the same. Right now, it's 4.375 versus the expected 4.375, previous 4.375. U.S. Fed excess reserves and statement compare. These three things right here is probably what is causing the market to react negatively right now. It just depends on what he says. If he comes out and acts hawkish, then the markets will probably continue to sell off. If he comes out and acts completely opposite as to what they just said on the newsprint, then everything will be different. But those are these three right here. The Fed leaves the rates on hold, which we knew that was going to happen, as expected, in unanimous decision. We figured that. Economic outlook uncertainty has increased further. Well, whatever. I agree to disagree, but okay. And then the one under it, it says U.S. President Trump unwilling to lower tariffs to get China to the table. China has already said that they will come to the table. I don't understand what's going on. That's literally why we pumped yesterday. I guess Trump has changed his mind, or President Xi has changed his mind. Either way, it's us and China. Really, that's it. And then President Xi says he's looking forward to talking ties and cooperation with Putin, Russia. So he's literally doing the exact opposite as what they said they wanted to do yesterday. So yesterday they want to fix it. Today they want to break it. That's why you're getting a negative outlook. So if Powell comes out and acts hawkish and says these things like outlook, they literally said, the guy in the squawk box literally came out and said that in the Fed's paperwork that they released with the statement literally says that inflation is going up. And we know that is, not true, right? As of right now, we had a lower print on the PCE, much lower. It beat expectations, and CPI was much lower, 4-year low. So unless they're looking at data I'm not looking at, which is possible. They are the people, right? They have the best data on the planet. I don't see what they're talking about. But yeah, even the White House has came out and literally said that these plans with the tariffs was a negotiating tactic to get other countries to the negotiation table. That's why we started pumping. But it looks like some of the Fed members are definitely trying to keep things a little bit more on the uncertain side of the spectrum, and we know that markets do not like uncertainty. So just be careful, because today's range is so small in comparison to yesterday's range. We just took out the low of day. I don't see any reason why this could not run up and take out the high of day, which is here, and then dump. But if it isn't going to dump, if it's going to go higher, then low of day is literally where you would be looking for bullish entries.
And making your way in around 9 minutes' time at bottoming out, we will get to the beginning of Chair Powell's press conference in wake of that Federal Reserve rate decision. In terms of what we're looking out for, attention will be on any further clarity surrounding the path ahead for the Fed, whether he maintains his wait-and-see approach as the committee waits for greater clarity. I'll also be paying attention to any communications he has around the Trump tariff impacts. And of course, regarding the latest statement, they did say economic outlook uncertainty has increased further, and did add the line that risks of higher unemployment and higher inflation have risen, which of course both sides of the mandate. And for those that want to watch the press conference live, we have put a link to the top of the headline feed.
I don't click links, bro. You know that. All right, let's go look at the unemployment rate. Clearly, we got to go to a monthly. So we did get an unchanged. We did just have NFP last Friday, and we got unchanged. Boom. So maybe they're looking at a more predictive data than what we get. The PCE data or the CPI data is always a month behind. It's always lagging a month. So the data that we got in April was actually from March. You get what I'm saying? The data that we're going to get from CPI this month will be from April. I don't know if the jobs number is like that as well. I don't really care. I'm a technical trader. I trade what the chart says to do. Right now, we have a bullish engulfing daily candle on our hands. Right now, the chart is more bullish than it is bearish, and economic outlooks have gotten a little more certain. We do know that the Trump tariffs will get reinstated. We are still at a very heavy technical area for sellers. Let me see if I can pull up some of the data that I was looking at today. Boom. Damn, this guy is busy. This is a good chart right here. This is the signs of euphoria, and it shows you percent supply and profit. That's going to be your blue line here. This red line is your very high risk. Yellow line is high risk. Green line, very low risk. So generally, you want to invest in Bitcoin whenever this percent in profit signal line is down around the green. And you can see the black in here is actual Bitcoin price. So yeah, that's typically when you want to be an investor. You can see over here to the far right-hand side of the chart, it is and did hit 90% of supply is now in profit. That is a very high risk area to become a new buyer, because 90% of the supply that's being held right now is in profit, and that is supply. And supply, when is greater than demand, can force prices down. We know this. So obviously, if you're looking for fresh longs on Bitcoin right now, you're doing it the wrong way. Now, is this a signal to get short? No, it is not, because we can see this go much higher than where it is now. It's just a much more risky investment than it was back in 2023, at the beginning of Q4 2023 would have been a really phenomenal time to be a buyer if you missed the buy at January 2023, which that was the ultimate place to be a buyer. So basically, we did buy the 2023 area, and then I guess one could have bought while we were accumulating for 6 months back in 2024, and then a period last time you got back to the risky area. It's not super high risk like up here, but you get my point, right? Those would be areas where one could theoretically throw on new risk positions on Bitcoin. So anytime you're buying when 90% of the supply is in profit, you are taking a chance buying into sell pressure. All right, so literally that's what we were talking about up here last week. We wanted to see Friday If we were going to see a bearish move from up here, we wanted to see that bearish move come into place Saturday and Sunday. We did get that move, but then once again yesterday, we tested the yearly opening range and then
I'm
put
just
in a
making you aware of
bullish.
some central bank commentary for the Fed in wake of that rate decision. Deutsche Bank.
We did put in a bullish engulfing right here off of the yearly opening range. So that does suggest we're going to go higher. That is, of course, unless today puts in a bearish engulfing. So if we do get a bearish engulfing candle today, then tomorrow and moving on into next week, you could potentially be looking to be a seller on Bitcoin at resistance. Now, if the Fed comes out extremely dovish in today's meeting, despite what the report says, and it is possible, we have seen that before, where Powell comes out completely, says the opposite things that was stated in the report. If he says that, acts with a very dovish tone, the markets could take that as a good sign and run higher. But we are at a very, very pivotal area of risk here. That could also force prices higher. Obviously, if you start seeing massive short squeezes taking place above last week's high, I would no longer be looking to get short. If you are looking to get short and you think that this is setting up a double top for a liquidation break back to the downside, then clearly you want to be looking for a short once you liquidate last week's high and then reverse back underneath that last week high. Right? You don't want to try to short above it, because when you're above it, when price is trading above last week's high, you are still in the process of running the short squeeze, and short squeezes can last for a very long time. They can last for days and days. So you want to wait for price to get up here, trade up here for a couple hours maybe, and then reverse back under. And then that's typically when you want to get into your short position. And then you would use that high of day as your stop loss. And that way, if markets are going to resume back into their bearish state, then you will be positioned as perfectly as you could be positioned to catch a bear market. All right. Now, what we have going on gold right now is this. Gold is still very, very bullish. Gold got into a massive short squeeze the last 2 days, and we did ultimately see that come off a little bit once we got that fresh news that China and the U.S. were potentially going to go into talks here. It came off pretty good late session, like almost it was actually at the end of the day. And today it has literally been chopping sideways in a very small, very tight range. This was your high of day, not yesterday's high. That's all the way up here, but today's high of day was right here. So basically I watched as price traded up to liquidate the high of day. Then it fell. Then I watched this candle right here get lower high. So I entered a short position. My short position is right there. Boom. So you can see that with today's price action, this is your VWAP. This is your outer band upside VWAP standard deviation move. So with the size of the candles that we've been printing, this is your outer band, upper band volatility. This is your lower volatility band, basically being plotted off of this blue line. This is your volume weighted average price. So we come up, we liquidated the high of day on the futures. Not quite. Let's go get the actual price. Doesn't look like we did on the micro gold futures contract, but it is possible you did liquidate on the main futures contract. I don't know. I haven't looked at that yet. But that high is 3406.60. And then this high right here is 3406.50. So it's the exact same price. It's not a liquidation, but it's close enough to be one. Prices have since retreated, but you can see this entry. That's what you're looking for on, say, a short trade on Bitcoin if you think that's what's going to happen. But once again, you would wait for it to trade up last week's high and then reverse Once it gets back under, then you can use this objective price point to manage risk from. All right. If gold's going down, I still stick to my guns on that. Obviously, I could be 100% wrong, but I was looking for gold to pull off a little bit from the highs, show us that there is profit taking place on gold, so that way we could see maybe see a lift on Bitcoin. Gold did pull back. We did get a lift on Bitcoin, so that did work out. But yesterday, gold was like in the midst of a short squeeze. Literally, you had China dumping the yuan. We can go look at that on forex.com. CNH. So here is your Chinese yuan versus, or it's a USD versus the Chinese yuan. If you want the Chinese yuan chart, all you have to do is hit Control I or Shift I and invert it. I don't remember how to invert it. Invert the chart. And that's your yuan futures. You can see that yesterday you did get a big spike. This was when the news came of them dumping their currency. Yeah, it's crazy. So these 2 days had gold in an uproar based on that news alone, I guess. But I like what James Stanley has to say about things like this. If you want to look at the macro picture and say this is going up because of this, I mean, technically you won't know that to be truth. It can just be one other thing, I guess you could say. Or you could just look at price on a technical basis and say, who cares why it is going this way? It is currently going that way. It would make you be a little bit more hesitant on shorting this move on gold, because there is no reason or no technical purpose right now to even be looking for a gold short, right? You're well above bullish momentum on your momentum oscillator, and you're well above your 21 on the daily time frame. So that says that the bullish trend is still well intact here. You couldn't even close one day under it. So what it looks like to me, even without the macro case, if you just look at this chart in hindsight with the moving average, you could say, well, this was a very strong technical place to be a buyer. Your oscillator, your momentum oscillator, cooled off from being overbought, came back down to the 50. With this wick right here, you did test the 50 to perfection. I was watching it happen on this day. I was in a short trade. That is why I closed the trade. I noticed that we were going to be in contention with the 21 exponential, and I realized that we were also going to be in contention with this 50 down here, which is a technical buy signal, not a sell signal. It's a buy signal. And then the buyers came in, ba-boom, and you patch that in with everybody always trying to catch the top. Retail always is shorting the top, always. You got a massive short squeeze the last 2 days, regardless of what macro news came out. So it just looks good for a technical buy. Me shorting it here is just looking for scalps, guys. I'm not a macro analyst. I am a scalper. I look to make a little bit of money each and every day, and then I take my wad and I go. I do not look to be a macro investor. I do hold stuff long term. Like I do hold Bitcoin in a cold storage wallet. So naturally, I'm going to be a little bit more biased to the bullish side because I own Bitcoin. I own quite a bit of Bitcoin. But as far as my day trades go, I can be bearish and bullish every other day. You know what I mean? It just depends on what I'm seeing in the chart that day for order flow. What does it look like price is doing? What does it look like the overall market is thinking about and all that? And then I try to position myself in that very way. Let's go look at Bitcoin here again. Let me see if I can put my big grid up, but you won't be able to see everything. You'll be able to see everything if I leave it on this chart. Let's go look and see what everything else is doing over here. So you got Tesla, Apple, Microsoft, Nvidia all down here on the bottom. Right now, Nvidia is tussling with the monthly VWAP. So I'm not even listening to the speech. I guess I probably should. Let's go listen to the speech. Ay, ay, ay.
Keeping in mind that, without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals
I can't even
are
hear
in tension.
him.
If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework.
We empower those who act, those who see the correlation between things above and
families and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum goals. Thank you. I look forward to your questions.
All right, so this is basically what we want to listen to anyway.
Steve Leisman,
What
thank you,
the-
Mr. Chairman, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Bitcoin trading up into the intraday VWAP right here.
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March.
Right
so
there,
that's
he
what we
just literally said it. So he's coming out with a hawkish stance.
can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff
But
policies
remember,
are going
Bitcoin
to
could be wanting to
settle
liquidate
out,
the high of day.
and also
So
when
if
they
you
do
get
settle
short
out, what will
right
be the
here
implications
at
for the
daily
economy,
res,
for growth, and
you
for
still are
employment. I think it's
risking
too early
the
to know
daily
that.
highs.
So, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think if you look at where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick.
ES has not tested its intraday VWAP yet. So, there's a risk of that happening.
Nick Kimmerer of the Wall Street Journal. Chair Powell, there's naturally a lot of PTSD around 2021 with the supply shocks. But there are some who argue that the
What's
current
up, Wes?
situation has notable differences. Energy costs are down. Housing imbalances look nothing like they did 4 years ago. Labor demand appears to be gradually cooling, with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
So literally, what do
I
you
think
see
the
that can
underlying
wreck the
inflation
markets?
picture
Great
is
question,
good.
bro.
It's what you see, which
did
is
you vote
inflation
for?
now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and
Welcome
we're
to the
in a good
club.
position to wait and see is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And, we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
As I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And,
I agree.
When things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and as that develops, and I can't really give you a time frame on that.
John L.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult
Both the stock
for
and
the Fed
crypto
to
markets are
cut
in
rates
greed.
preemptively, given the higher risks for higher inflation. So, given the outlook, do you still see a path for a soft landing, and what does that look like?
That's a good
Well,
question.
let me say, so let's look back and see where we are. So to go through 2024 up to the day, we've had unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s.
Consistently, right? That's what's important with that, what he just said, but consistently is what he should say. Inflation has consistently been going lower for the last 3 years, since inflation peaked at 9.1%. It's literally been going down. It's been stalling. Obviously, we knew that the last 4 points on inflation would be the hardest 4 to get. So it has been a little bit sticky, but we got fresh 4-year lows on the CPI. We got a lower PCE print. Yeah, I mean, it is going down.
We've had an economy
Bless you,
growing at
baby.
2.5%. So that is the economy
Bitcoin
as we
rejecting
see
off
it
of the
now.
intraday anchored VWAP.
What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay.
Like I said, not a macro channel, more of a technical channel over here. So I really don't care what he has to say. I'm going to read it all anyway, but I do want to interrupt him briefly and just say there are metrics that we can literally look at to see if your market participants are pricing in inflation or higher inflation in the future, right? There are literal ratios designed specifically for that purpose. So that way we can go see what are they thinking. And this one right here is a huge metric that is looked at whenever there is inflationary fears, or if inflationary fears accelerate, your price will go up. These things will go higher, right? That is literally not what we're seeing right now. And also, gold is also kind of an inflationary hedge. People do buy gold for an inflation hedge. So I think gold's been going up for other reasons other than inflationary fears. These things right here will give you a like a better outlook as to, is the market participants pricing in inflation or is something else going on? And I honestly think that there's something else going on with the gold chart. To be honest with you, I think we were seeing a good buying opportunity on gold as a technical buying opportunity, and then a massive short squeeze from retail jumping in way too soon on the short trade. I wouldn't doubt it a bit if we seen, I'm not suggesting we will see, I'm just saying if we did see a week from today, if we go back and look at gold and we see 5 bearish days in a row and we end up being down in this area, I would not doubt it a bit. You know what I mean? But if that occurs, I would also assume or expect Bitcoin to go up and risk markets to continue to go up. If they want to stay in a bear market, I'm okay with that because you can make a lot of money really quickly in a bear market. Generally, in a bull market, prices are very slow, volatility is very low, and price ranges on an intraday basis are very tiny. Whereas in a bear market, you get massive intraday price ranges, you get an explosion in volatility, and it's just mwah. You know what I mean? I would much rather be bearish in a bearish market than be bullish in a bullish market as far as intraday returns are concerned. But as far as it's just easier to be in a bull market, to be a buyer, yeah, over time you will get those same gains, only more, because you don't have that excessive volatility to contend with on an intraday basis.
In that, I think in the, in our thinking, we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years.
I'm trading.
It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to
gold
to the data will be until we see more data.
Wide. You got 3406 spot
Smith of the New York
60,
Times.
and then
How much weakness
3406
does the
spot
committee need to
50.
see,
So it was
though, in the
not
labor
a
market and the
liquidation
economy
by
more
one
broadly
tick.
to lower interest rates again? Is it about a certain increase in the
That's
unemployment
pretty much
rate
what the micros
over a
say.
period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
So first of all,
I'm
we don't
gonna
see
go ahead
that
and
yet,
close
right?
the
We have
gold trade because
4.2% unemployment,
Bitcoin
good
is
participation,
going lower.
wages behaving very well.
The gold might bounce
participation,
here.
I mentioned it at a good level. So, with the labor market, we would look
You're
at the
at the bottom
totality
edge of the volatility band.
data. We'd look at the level of the unemployment rate. We'd look at the speed with
And
which
then
it's
I'll watch
changing.
it. That was a nice.
We would look at the whole
nice
huge
winner on
array
gold.
of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course,
If it comes back into the intraday VWAP and rejects there, I will look for another short entry. But, we made money on it, so we could literally be done for the gold trade today. And the short trade on Bitcoin, I did lose a little bit of money on the first entry. I got in a little bit low. That trade is also, I got back in at, once we traded back up. So got in a little bit higher here. We're sitting at about 260. I did lose or I did drop that leverage from 20x down to 15 because I knew today would be a little bit more volatile. And if it does want to have a down day or whatever, continue lower, then I will be positioned pretty well for it. Not quite up at 4-hour res, but at an old 4-hour res, just a little bit above an old 4-hour res.
Balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that
Little bit
the
below,
committee would
sorry,
consider how
below
far the
an old
economy
4-hour res.
is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
Does anybody know
It
this
would be a
dotted
combination
line
of
is
the
on
two.
the
I mean, let's just say this would be
Bloomberg
a
terminal charts
complicated and
is?
challenging judgment that we would have to make. Yeah, we're not in this situation,
This
but the
dotted
situation is
line,
if the two
is that
goals
the
are in tension.
open?
So let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. You know, we haven't faced that question in a very long time. So again, difficult judgment to make, and not one that we face today, and we may never face it, but you know, we have to be keeping it in our thinking now.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid, that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
You know, it's going to depend. I think you have to just take a step back and realize this is why we are.
I have a bearish
where we
position
are,
on Powell.
is,
Could you please say that we're going to see a recession and that Trump
There are
sucks, so that
cases
way you
in
can
which it
send
would
the
be
markets into a
appropriate for us
tailspin
to
for me,
cut rates
please?
this
Thank
year.
you.
There are cases in which it wouldn't.
That's
And
literally
we just
his
don't know
question,
until we know
almost.
more about how this is going to settle out and what the economic implications are for employment, for inflation. I couldn't confidently say that I know what the appropriate path will be.
Hedge your long positions. That's the appropriate path right now. If you are wondering, what do I do? Hedge your portfolio. If you are holding long-term risk, then you need to hedge out some of that downside risk. And now is the place and time to do it on both Bitcoin and the S&P 500. Here is your S&P 500. Last Friday when we did the live stream, that's the reason why we did the live stream. We did the live stream on this day for the public, so that way nobody couldn't say that I didn't come out here and warn you guys of a potential downfall. I honestly don't think we're going back into a bear market. I honestly think prices will stable out as time goes on, and we will slowly start to creep back up, or we will be in a range-bound market for a while. Either one of those two scenarios is more probable for me than us seeing an 08 style crash or a Black Monday, right? So that's how I'm going to trade the market. So if you are holding long-term risk exposure, then it would probably be best for you to go ahead and start to potentially look to put on some kind of hedge, whether you're buying long-dated puts. Just please understand, buying premium with an elevated VIX, anything above 15, you're going to pay a sizable premium for those puts. Please do not wait until the VIX gets up to 40 and causes the implied volatility on those puts to be 3 or 4 times as much as they would have been had you bought them, you know, at a 20 VIX, right? Or a 15 VIX. That's typically when you want to hedge your downside off with those puts that will explode in value as prices tumble. And at some point, if you just do simple second grade math, addition, subtraction, multiplication, and division, you can do that and pretty much figure out where your accounts will come into parity, where that put will literally start to basically hedge out all your downside risk, or how many puts you need to do that. But you don't want to, you don't want to hedge it completely out 0 for 0. Otherwise, you're just sitting in a delta neutral position, and you're not gaining any alpha from that delta neutral position, if that makes sense. You'll actually come out a loser once all the fees are said and done and this and that. You want to be skewed probably more to the more positive side right now, unless we start to see the VIX climb. Then you can always put on a futures position on you, either in a U.S. market or on an offshore market. There are plenty of different vehicles that you can use to hedge out any downside risk on any long-term exposure.
Then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider.
That's
so
all your
doesn't
job is. That's literally all his job is. Try to keep maximum employment, try to keep stable prices in the marketplace. That's it. That's all he can do.
Either our job or the way we do it.
He's not going to be your political hit piece. He's not going to destroy the markets just because most of the people asking questions do not like the new president.
Howard.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, I mean, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you.
Okay, so we did get a negative print on the GDP, but if you remember, excuse me 1 second here. Okay, if you remember, there was a point in time during the Biden office where we got 2 negative prints in GDP, and do you remember how everybody on Twitter was gaslighting the whole entire of the United States of America, saying we're not in a recession, even though we got 2 negative GDP prints, because they wanted us to look at the other 5 NBER prints, and none of them were signaling a recession. Yeah, we got a negative GDP print, 1. We haven't even gotten the second one yet, and you would have to look at the other 5 NBER prints to see, are we even heading into a recession? Many people were calling for a recession back then. It did not happen. Many people are calling for a recession today. Will it happen? Nobody knows. But where we stand currently, it might. It might. It really could. You know what I mean? Because we are close, but we still need that second GDP negative print before you can even say you're in a recession or headed towards one.
About the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have.
Just simply say the VIX is elevated, bro. The VIX is elevated. That means there is uncertainty out there.
Risen, but they haven't materialized yet. They really have. They're not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity.
Exactly.
And
and the VIX is also in a very good place. Remember, it opened up at 60. Anything above 40 is like bad. Most of your premium VIX seller, or most of your volatility sellers, will start to get very, very happy when they see a VIX above 30, because that's when they're going to start looking to sell volatility. They don't even get out of bed for anything under 30 in most cases, but above 30, they're going to play ball. That is also why we've seen such a massive drop so quickly when we did open at 60. If you notice, you did not close a single day above 60 on the VIX. That is a good sign. That literally means the markets are bouncing, right? They are bouncing. They're going back up. But we still are in that period of risk because your VIX is still elevated. Anything above 15 is considered elevated. And you are testing the 618 retracement of your yearly range on the S&P 500. That is why this is a good place to potentially look to put on any kind of hedge that you want to put on. I wouldn't get all out bearish here. You got the weekly expected move is still firmly intact down here, right? If I was going to be bearish, I would want to see prices smash through this without even slowing down. We haven't even tested it yet. This is not bearish by any sense of the imagination. This is actually more bullish than bearish, I would argue, because you're not smashing through that. You're not seeing that huge volatility come back into the marketplace yet, even with a potentially hawkish Fed. And we're not seeing people position their portfolios into higher inflation. We're not seeing any of that on other markets. It's just, I think a lot of people are trying to force the market to go lower because of their positioning or their political biases.
There's usually things clarify and that the appropriate direction becomes clear. That's what usually happens.
Yeah, and
right now,
that
it's
will
very hard to
happen
say
in the
what
future.
that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there.
I think, honestly, I would be a little bit more concerned if the Fed was stumbling to drop rates. That would be more concerning for me as an investor and a market participant if they were like literally coming out and just dropping interest rates at like 25 and 50 basis points at every meeting. That would suggest to me like something bad is going on. Seeing how they're not even going to move yet, they have time, they see it in the paperwork, in the data, that says that that's kind of a good thing. I mean, they probably do want to stay as restrictive as they can for as long as they can, because since the 2008 crisis, the Fed has been in a very, very, very low, they weren't restrictive at all. You know what I mean? Like, this was the first time that they got really restrictive in a long time. It's been a long time since the Fed's been at a high interest rate.
I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking.
That's a lie. You're literally on the fear and greed index for the stock market. You are in greed territory. In crypto, it's even worse. You are at 67. That is not negative sentiment. That is actually the exact opposite. Gaslighting.
About the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well.
The low
It just hasn't shown up
GDP
yet.
suggests a slowdown, bro.
We all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that. But in the meantime, yes, we're watching it extremely carefully, like everyone is. But
as middle of the road as he
much
can.
evidence of
Obviously,
it in actual
he has to, or he won't be
data
there
yet.
long.
And by the way, consumers keep spending, credit card spending. It's it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
We were in bear market territory for 2 days, so I mean, you did have that. There was that.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that
back above? Wait, this is this
the
today?
critique
No,
was
this is
based
not
around
today.
the
Let's
fact
get
that you
this.
did QE and QE and QE and went beyond the narrow
I
confines
missed
of your
the
mandate.
gold entry. It
Well, I mean,
literally
there are a
did
couple-
test
that's not really
its
beyond the
intraday
confines of our
VWAP
mandate. Look, I would say this: we
and
we
rolled
did
over.
things.
Let me get it
Essentially,
on
we're on an
here.
emergency footing for a couple of years in the pandemic, and it's
Weighted
very
is
fair,
pretty
very
much
welcome
or
for people to look back
not
over what
weighted,
we
but
did and
the
say, hey, you
anchored
could have
is
done this
pretty
better
much
and
the same
different.
thing. It's
And
just
one thing we hear a
using
lot is
the
we could have
indicator.
explained
It's going to
QE a
give
little
you the
better.
same data.
We
Oh,
did
I can't get it
think we
because
were
I'm on
explaining it in
Forex.com.
real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening
We
in
did get
financial
back up
conditions
here
at a
and
time
test
when
this
we thought
VWAP,
the
and
economy
then
was
it
still
has
vulnerable.
slightly
and
rolled
so
over.
we did hold on for a long time to
I missed
QE,
that
and we, of
secondary
course, tapered
entry.
and everything. And then we immediately went into QT.
But it's not breaking down below the
we're down
bottom
a couple
ball
of trillion,
band,
but
which
I
would
get the-
suggest
we
lower
certainly, with the
prices on
benefit of
gold. That's
hindsight,
kind of
could
what
have
I
tapered
want to
earlier
see.
or faster. That's absolutely right.
As
But
long
this
as
is
it's
all
staying
very welcome.
above that.
It's
As long as it's staying above that bottom vol band, you have to be very, very cautious about being short, because gold can be right back up to the top volatility band in literally 20 minutes or 5 minutes, even if something is said they do not like. But I think we've heard everything we need to hear. I mean, technically, we didn't even need to hear him say that because we got the news well before he even came out to speak. They are slightly saying, of course, with the Trump tariffs, things could be different. We get it. And we're not seeing any massive volatility come in here on the S&Ps or on Bitcoin. So, I mean, to be honest with you, if we were going to see a very big downside move, don't you think that would already have happened? I mean, what have you done? You liquidated the low of day. You liquidated yesterday's low here on the S&P 500 on the cash market, not the futures, the cash market. Took out yesterday and today's low, and you've bounced, right? You've bounced. You tested the weighted or the anchored VWAP. You rolled over, so that was a nice little short scalp for some people there. They are now stopped out. Now, we could see more choppy price action moving forward, or you could see prices just slowly continue to go higher until it gets above this area here. I would contest that for the S&P 500 to really get going, maybe get above that Jan 2025 low, because we tested that to perfection here back when we got into bear market territory. Even though this is a 618 retracement of the yearly range, which is a decent place to look for downside continuation, right here it is, right? So as long as you're closing dailies under this point, you have to be a little bit concerned that you would still potentially see that rollover. But the simple fact that we have not smashed through the weekly expected range lows yet suggests it's not that bad. Right? It's not that bad. Most market participants, in my opinion, are optimists rather than pessimists. You have a very small subset of individuals out there who are only sell-side traders. They always want to see a bear market, obviously, but the majority of people are long, right? They get long and they stay long because that's where the majority of the money is made. So, yeah, I mean, I will be a little bit concerned as long as we're below that, but I'm not like uber concerned, because on my technical signals right now, bleh. My technical signals are telling me that I should be looking to be a buyer on pullbacks to support. Now, I don't have a legitimate support to buy here. I arguably could have bought a liquidation of yesterday's low. I didn't. And we did liquidate yesterday's low on the futures as well, right? We did take out yesterday's low as well as today's. You are getting a small bounce. Gold is pulling back down to the bottom edge of that range. So it'll be interesting to see how Bitcoin closes. This daily candle does not look like a bearish candle to me. In fact, if today closes where it is or higher, this is going to look like a potential 3-bar pattern where you're going to see a breakout. Now, I have seen times in the past where the Fed came out slightly more hawkish than dovish, and on the Fed day during the newsprint and after he was done answering questions, it still did the same thing. And it wasn't until the next day where you seen that dump Ola happen. That you have to be aware and prepared for that as well. So you are closing below daily resistance as of right now. So this, even though it hasn't taken out the midpoint of yesterday, it is still closing under daily resistance. But we still got 45 minutes left before the market closes. This isn't a bearish looking candle at all. So I'll be interested to see where this 4-hour candle closes. Does it close below this one? If so, do we stay above it on the next session, on the next 4-hour session candle? Like, what do we do then? Do we break down then? Or do we basically test and hold support here? If it tests and holds support here, I will probably be closing that short out and looking to re-engage on a long, targeting last week's high up here. Because it's not quite a double top, but it's almost a double top. Not quite equal highs or whatever you want to call it as far as a pattern goes, but you do have a clear area to target to the upside up here. And if we go look at our liquidation metrics, let's go look on a 24-hour band real fast. And it still does look like it could go either direction, and as far as just trying to generate liquidity, we look at the liquidation map. I look at this one down here because this is all exchanges. This one up here is on Binance only. And though there are a lot more traders on Binance, a lot more volume on Binance than most other exchanges, this is all exchanges combined. So this one, I think, gives us a far better read on where people are positioning. My problem with this tool is that it's still the Wild West in the crypto land. You can still spoof orders like crazy in Bitcoin futures exchanges, right? You can totally spoof the order book if you wanted to. And that's what you're getting here. You're getting limit orders. So market orders are not being read here. We're not seeing what's actually happening. It's just what could potentially happen. And it looks like there's more liquidity. Well, it doesn't look like there is. There is more liquidity to liquidate on a one-day basis to the upside than there is to the downside. That's what this green band is up here. So whenever you have this, 2.6 billion on the bid, 200, wait, these numbers aren't the same here. I can't get it because the thing's blocking my cursor. It's higher than the red, right? So that means there's more liquidity to the upside than there is to the downside, but that's on a one-day basis. If we look at this on a 30-day basis, there is a lot more liquidity to go grab to the downside for sure, right? A lot more. You're way down here on the buy side on a 30-day time frame. The near term is more on the buy side though. So I can see prices scooching up a little bit higher and then dropping. but there's a period up here of thin liquidity. It'll just be based on demand if you blast through that zone or not. If there's not, then gold just dropped off the chart. So that's what I wanted to see. I'm going to go ahead and close that short position on Bitcoin for a small profit to at least go break even on the day. And then I have literally all my capital to potentially attack this next 4-hour session. If I do, I don't know that I will, because let's be honest, the majority of the move is happening now. So the rest of the day will be slow, especially when that press conference winds down. And you are still basically doing nothing on the day. You're not an inside day. So if you're new to the channel, welcome. But we look at the candlesticks as there's only 3 kinds of candles. You got trending candles, inside candles, and outside candles. And what you have here, even though it is still a bearish candle, it is a trending candle because you did take out the high to the upside, right? You got a wick above yesterday's range. So if you close bearish, it is still a trending candle. That does not mean you will get upside continuation the next day, but it does suggest that the market is stronger than it is weak, right? If the market was weak, very, very weak, we would expect this to be an outside candle, taking out the previous day's high and the previous day's low. That's what we'd expect in a very weak market. We're not seeing that. We're not seeing that at all. Yesterday was an outside candle as we took out the previous day's low at the yearly opening range and then closed well above the previous day's high. So this candle right here is a pretty decent buy signal, but we just have to wait and see where that support intraday is forming. Is it going to be at April's high, or is it going to be at that old weekly res? That old weekly res is just coming from this close right here. All right. And then, of course, daily res and then last week's high. Those are your major areas of operation, or that's where the majority of people are going to be looking for entries, whether it's shorts or longs. We can go to the 30-minute time frame, pull up our session volume profile here, and we can see what's going on intraday. The majority of the volume was traded yesterday at 94. Currently, right now, the point of control is above near-term price. So this could suggest we'll have to just wait and see how it closes. So even though gold did drop off the chart, all it did is liquidate today's low. It has not liquidated yesterday's low yet. Just today's. So this could still end up rolling over. As long as you're trading under your anchored VWAP, you have to be a little bit more concerned for the near term. The near term. But on a longer term, like looking at the daily time frame, this looks good to me. I mean, you're trading at 30-minute support right now. And there's 10 minutes left on this candle's closure. So does it close under support or does it close above support? There's nothing really to see on the intraday, like as far as any like real big bullish signals to make here. As long as this 30-minute candle's low stays intact, you are making higher lows on the 30-minute chart. You're making higher lows on the hourly chart. Intraday support going to be coming in right here. Something to keep in mind, we did not take out this hourly candle's high with this bullish candle. So it's still on the intraday structure, still looks a little bit more bearish than bullish for now, because we didn't take out this candle's high and close bullish. I would have loved to seen that for upside continuation. But as long as support is holding in here, if it builds in here over a 3-hour period and you close well above this then there's a pretty good chance you're going to see at least a resistance test. Now, unfortunately, this range is kind of small. 96,299 to 97,085. It's not quite a $1,000 move. So you have to ask yourself, is there enough potential reward in that? Because you would have to take profits there if you got in on a long entry here. Because that's where the resistance is. You haven't closed a single hourly candle today above $97,000, which says a lot. Says a lot. Most of the day we spent trading at that price, and we couldn't close it above it. So kind of important. The intraday does look a little bit weaker right now, but I think if gold continues to go down for the rest of the day, I would probably be more prone to be bullish at 96,261, targeting 97K for that long take profit. And that is, of course, as long as you do not close this hourly under. That's also going to be something to watch. So 8 minutes on the 30-minute time frame here. Yeah, I mean, just because you can analyze price, it doesn't mean that you're going to be able for 1 second predict what it's going to do. It looks like as of right now, price is trying to build in support here. The 5-minute time frame, obviously the bears are going to beg to differ. The volume weighted average price is moving lower. You're under your point of control. You made a fresh low of day. You have not made a fresh high of day yet. So as of right now, the bears are still in control of intraday price action. But we know how fast that can change, right? If buyers are soaking up the sellers right in here, then you're probably going to see a nice little expansion back up to the 97K region, where once again you will have potential resistance. People are going to short this VWAP. They're going to short the point of control. You also got daily res sitting right on that point of control. These are all areas of short or short side interest. So getting above that could squeeze out some bears. Staying below that could be indicative of that they are in control of price. It's a difficult read. It's sideways. You're inside yesterday's range. It does look a little bit more heavy, but if you look at the value area low down here, you're also undervalued right here as compared to where the majority of the volume is traded today, right? If volume is the indication of value, which that's what this indicator tells you, where is value? Right here is the value area low. So anywhere underneath this, as of now, until you get a change, could be undervalued. We just have to see if it's able to hold support here or not. So if you're managing your risk, I would have to say that the low of day would probably be the area to manage the risk. And then that does not give you a good risk to reward based on the data that we have right now, based on what time it is right now. Remember, the markets are going to close in 30 minutes. The New York stock market will close. And you will not see another surge of volume come in until you get a fresh daily candle open. So if you are going to trade today, I would say probably wait for that, right? Wait for that, because I think if Asia comes online, which would be at 2000 hours right here, if Asia comes online and the open is somewhere down in here, then wait to see what happens with today's current low, or wherever that low ends up being. See, does Asia smoke the low, and then does Asia buy it? If they do, then you could potentially look for a long then. If Asia smokes the low and you get downside continuation, then maybe you don't want to look for a long. Because the next area to potentially be a buyer is the May open, the month open, not last month's high or previous month's high. These are two areas of interest, but they're not an area where I would want to be a buyer. This is an area where I would want to be a buyer, and that is only if support holds here. Looking back at the daily range of yesterday, that's a little bit more of a deeper retracement than I would want to see. I would basically want to see the midpoint of yesterday's range stay intact. So I guess you could watch March's high for that. But a wick down to the May open, if we're going to see bullish continuation, that's about as low as I would want to see it go. Anything lower than that, and I'm probably just not going to be interested, because this was a phenomenal bullish reaction off of that yearly opening range. So if the bulls are going to defend, I would want them to defend at either May's open or March's high. And that's what I would use going into tomorrow's session as well. What's up, Brian? Okay, because that will tell us something. It will basically say, well, when the Asian and London sessions traded through, they couldn't hold the midpoint of that bullish day, that bullish bounce off the yearly opening range. It ended up setting a lower high. So that would be more of a bearish signal on the very near term than a bullish signal, right? So we'll just have to wait. I'm not interested on taking any new positions right now. I'll wait and watch Asia's open, see how that goes. Hopefully I am asleep during the London session. I wasn't this morning. I hope I am tomorrow morning. But if I'm not, if I'm awake during the London session, then if I get a trade entry, I will take it then. Because I would like to see either the low or high of day made tomorrow at the London session. Because based on how Asia and the London trades this, will probably be a huge indication on what New York might look to do. Like New York might absolutely look to just stay in that direction, whatever direction that is. Any questions? Any questions? But we're not seeing anybody. It doesn't look like people are investing in inflationary assets right now. It just doesn't look to be the case. That could change in the future, obviously. I keep looking at that stuff on a week-to-week basis. I want to know if people are investing in assets to be an inflationary hedge. We're just not seeing it yet. So that's why the Fed isn't doing anything. They do not see any reason to do anything. Like $94,500 area to look to be a buyer. Yeah, I mean, it's right above the May open. So, I mean, I don't see why to be a buyer at 94.4 or 94.5. Sorry. I mean, I don't see a technical reason to be a buyer there. But just below it, you have the May's open. We're in May. So if we're going to see bullish continuation for the month of May, then clearly I would love to see the month of May's open hold. Now, with that being said, how many days are we into the month of May? We're 7 days into the month of May. And last week's high is still the monthly high, right? I would love to see price be able to take that out and get some upside continuation. If that isn't going to be the case, then it will start to look like, it's sell in May, go away. I know you guys have heard that pretty much as long as you've been trading, but if you just look at the data, there's nothing that supports that on Bitcoin, right? I think the data is actually skewed the opposite direction on Bitcoin. Now it looks like we are getting a little bit of downside continuation on Bitcoin right now. We're threatening the low of day. Oh, we just took it out. Just made a fresh low of day. Probably should have kept that short open. We were not my entry was not being threatened at all. I just closed it because it's late. It's late in the day. I generally look to take my positions and my money way before now. I'm generally out of the markets by noon. If everything is going the right way, then I'm generally out of the markets by noon. But this was my bearish entry right there, just based on the Fed being more, well, he wasn't hawkish, but he definitely wasn't dovish either. Just by them stating that uncertainty is worse now than it is last time they met, is going to be more of a bearish talk than a bullish talk. But we were never threatening my entry. I just wanted to close it out and basically end the day at break even, because it did look like they were going to threaten that entry. But now you're seeing that downside continuation. Now, would I be a buyer on gold based on this? Nope. I'm not touching anything. Just seems like people are treading water until Besant meeting tomorrow. Besant, yeah. I mean, he does move the markets when he talks, for sure. For sure. Yep. But so did Yellen. You know what I mean? When she had the job, the Treasury's always going to move the markets. I would say more people were waiting for this Fed meeting than they were necessarily waiting for tomorrow, but there is a lot of uncertainty out there still. And since there is so much uncertainty out there, like I said, China is literally doing the opposite of what Trump thought they would do. Even though the majority of their people are like, I mean, I watch on Business Insider, that guy's not afraid to talk about China. A lot of YouTubers are. So I listen to him. He's talking like right now the whole country's breaking down. You got factories closing over there based on these tariffs. Everybody they're protesting. Right? I mean, generally that doesn't happen that often in China because they're a communist party. They can disappear you if you protest them. You know what I mean? A lot of people try not to do that. Right now they're fed up. They are very fed up with that government. So, yeah, I guess Trump just didn't read the room right. China is huge when it comes to our markets because, I mean, ever since this became a one world government in a sense, or take all the manufacturing away from America and give it to China, now we have to watch what happens with China. So naturally, nobody wants war, but it is what it is, right? Can't do anything about it. I'm not a macro analyst. I'm not even going to try to look at any of that data and make trading decisions. I make my trading decisions based on my indicators. What is the market telling me? Where is order flow going? How is order flow looking? Like, just because we made a fresh daily low right now does not mean that Bitcoin is going to close the day out down here, right? As long as yesterday's midpoint is under control, it is not, it's being threatened right now. As long as, well, no, it's not. So your midpoint, if you don't know how to get your intraday midpoints, you just go from daily low to daily high with your fib retracement tool, and it gives you the midpoint. That's why midpoint is on the fib. The 0.5 is not a Fibonacci number. The 0.5 is just showing you where the midpoint of the day is. The reason midpoints are so important when it comes to candlesticks is because you have a bid-ask spread. Your bid-ask spread operates on a midpoint, right? So that's how, like, You know how if you get in, if your account's too small and you're over leveraged and you get in a position and you're in the wrong side of the market, you get taken out of the trade before you ever reach your liquidation point. The reason for that is because you're being priced on a midpoint scale, right? They're going to exit you out once you exceed 70% of your margin. Once you even get close to even smelling like you're going to hit that 70%, they're going to knock you out of that trade. They have to. Otherwise, you're going to owe them money. So that's why they do that. That's why midpoints are so crucial. That's why in a lot of cases you will see like intraday price action. Right here's the midpoint of yesterday. We're nowhere near it. And I always go from high to low, not the candle body, because the high and low of day matters, right? It does matter. That's where your liquidity sets. Anybody that bought yesterday more than likely has a stop down here below yesterday's low. So if the bears cannot even get prices to stay going lower under the midpoint, then that is more indicative of those sellers being soaked up to the bid side. Remember, this is a bullish signal, a bullish engulfing coming off of the yearly opening range. That is a huge level. This is your objective price that tells you whether or not Bitcoin is up on the year or down on the year. This is a very bullish reaction off of that price. It's a more bullish reaction than we got when we were here, but not as good of a bullish reaction from here. Boom, boom, boom. That's when we made and set that high. So now prices needs to take out this high for upside continuation. These are just levels to watch, to be interested in. I definitely wouldn't throw in a bid here with 400x leverage on an open for a 5-minute wick to trigger me into a trade and then reverse. That's not how I do it. I want to see how much time does price spend trading down there at that area. If you're spending hours under this level, then there's a pretty good chance price is going lower. If you can't spend even 1 hour under this, then maybe it's going higher. And then we wait for the new daily open and see what Asia does. Bitcoin trades 24/7. It never closes. So all the sessions are important. And you'll find that in some cases, not always, I don't even know how many cases, but I have nailed some really good trades by just fading that Asian move. If the Asian market comes out, takes out this day that we're currently in's high, because at 8 o'clock p.m. for me, that's 2000 hours, that's when Bitcoin opens up a new daily candle. It does not matter where you are in the world, that is when Bitcoin opens a new daily candle at that time. So you need to set that to watch. When you see a fresh daily candle open, where is it in regards to the previous day's high and low? Then how does Asia respond to that? Do they fade it, smoke the low, and then do they buy it? If they do, maybe we'll take a long then, because if we do get bullish upside continuation tomorrow, the best place to buy that day would be the low of day. And sometimes that happens at the Asian session. Sometimes it happens at the London session. But that is the best place to be a buyer. I don't think anyone can bring that comment into under contention. If you're going to be a buyer on a daily range, you would definitely want to be a buyer at the low of day, right? Not the high of day, at the low of day. But sometimes you're not going to nail the low of day. Sometimes you're going to get stopped out. I have been stopped out also buying Asian session, fresh daily lows in the London session. Because sometimes they'll liquidate that low in the London session. But we'll see how it trades the rest of the day. The majority of the volume is done for the day, I would assume. Gold isn't really doing anything. I will show you that one last time, and then we will wrap it up. So you can see here, gold just made a fresh low of day, and it's basically getting faded back into the daily range. So, I mean, does it make a fresh low of day before the futures market closes? Probably not, because that's going to be here soon, right? They close at 6 o'clock. Or 5 o'clock, sorry. They close at 5 o'clock. They reopen after all the settlement period. They give it an hour settlement period, then it opens again at 6. So if it's not making fresh daily lows going into the close, then it's not as weak as you think. You know what I mean? So just be careful, guys. We cannot predict price. I'll end it with this. We cannot predict price. No matter how good we get at analyzing price, we will never be able to predict what it is going to do based on any indicators, based on any knowledge of candlestick analysis. No matter what you know, you will not be able to ever accurately predict what price can do. However, what you can do is learn these areas, realize their importance, learn how to manage your risk, drop your leverage down to like 10x, go in with a smaller position size, quit trying to get rich, try to learn the process of managing risk, right? Go into a position not looking to get rich. I go into every position with the expectation that I'm probably going to get stopped out, and I don't want to lose money. So I hate losing money better than I like making it, because I spent so many years failing at this. That's why I despise losing money. That's why I'm also so quick to take profits. I like to be setting in the markets with a very small manageable position size, and with my unrealized gains, I would like to have already been paid for the risk that I took, right? It just makes it so much easier to manage that trade, to let it sit in the market for as long as I want, because I've already made money on the trade. So we're getting a nice reaction down here after making a fresh low of day. Let me get rid of that daily midpoint. We know that it's around the March high. So yeah, I mean, this isn't a very bearish day at all. It's very small in comparison to yesterday's range. Looks like the bids are coming in there. You are literally about to make a fresh low day on gold, so I don't know what I'm talking about, apparently. It's a good reaction. Bitcoin looks more bullish than bearish to me, guys. All right? And that's how I'm essentially approaching the markets on a daily basis. Right now, we have a buy signal. Right now, the bulls are in control of price. Momentum indicator says they are. We are above the 60 on the daily closing basis. This means not only are you bullish, you have extreme bullish momentum. The 50 is when the bulls are in control. The 60 means that they are firmly in control. Look at this daily candle in comparison to this one. Most people that are making trading decisions based on today are looking at yesterday saying, yeah, this thing's going to at least go up there, more or less. And they're looking to buy it. They're looking for a range breakout. Imagine how many shorts are in this based on this being a very pivotal location on the chart. If it is a dead cat bounce, Friday, we should have seen that. We did. It did look like it. I even told my Discord members, I said, this doesn't look very bullish. I never want to see a nice bullish breakout be met just 2-3 days later and price be right back down there. That looks more like a failed breakout to me. But then we get a test of that yearly opening range and some good news, and boom shakalaka, bulls are right back in business. Right back in business. So if you're bearish and you entered on Friday, this has to concern you. It would concern me. right? This would be very concerning for me if I was holding a short from Friday's high. I would be like, this isn't what I want to see. I would have been asking the Fed to come out and trash Trump, right? If I was holding a short, I'd be like, dude, you got to hate that man, right? Right? Come on, pal. Tell me you hate him. Tell me you're expecting super uber duper pooper scooper high inflation. Make sure you tell him that, right? Markets are going to crash, aren't they? Because Trump sucks, right? Yeah, he's not going to do that, but. So that's why if you get back above this, it's going to potentially cause another expansion higher, and those bears are going to get very upset. But they still have one more place to look for shorts, and that's up there. They will short it all the way to the all-time high. Who am I joking? The people that are uber bearish right now are any money they made back here, they are giving it all back over here. That's usually the way it works. Just seems like, okay, read that. Agree. The market was weak. We'd be heading down. Yeah. If the market was weak, I would say right now, you would be taking out yesterday's low. We would be looking at the chart and you would see something like this right here, or this right here. Bless you, baby. We're not seeing that, and the markets close in 15 minutes. Now, tomorrow will be more revealing as to which way this is probably going to go. And I would say there will be plenty of bullish scalping opportunities to get back up to $100,000. That's going to be a big, big area also. I mean, that's 100,000. You're back up there after being in the 70s, 74 back up to 100. Not bearish. That is not a bearish bounce. Look at how much time it spent sideways right here. Boom. It could be doing the exact same thing right here. Boom. Right? And we only need 2 more of these days right here. 2 of those days. You're at all-time highs. Think about that. Objectively, you're not even bearish on the year. You're still a bearish on the year on the S&P, but you're not in a bear market. You're just bearish on the year. You could just say, hey, this year's a pullback year. If you look at the price objectively as you can, then you can kind of see what's going on. The bears are not winning this push and pull right now. They want to win, but they aren't winning yet. And I think yesterday said a lot. It said a lot. So until we're taking out the yearly opening range, I have more of a bullish bias on this asset. And the same goes for the S&P, but we got a ways to go before we're even bullish on the year on the S&Ps. But still, this 618 is a huge level. This is where your bears are attacking right now because they do see this as a dead cat bounce. They are looking for a measured move. And the measured move they are looking for is ridiculous. But that's what they're looking for. This is what the bears are looking for. Let's go ahead and make this bad boy red. Clone him. And bring him over here. That's what they're looking for. They're looking for this to be a dead cat bounce. They're looking to sell into this. And they have a $4,300 target. At the very least. The real crazy ones out there are looking at it this way. You know what I mean? Yeah. No. I don't think Trump would allow that to happen. He knows that would be a devastating gut punch to the Republican Party. And he knows that the Republicans need to stay in office for any of his policies to continue forward, for him to have a legacy. And you know he wants a legacy, right? I think Trump will be more bullish for the markets getting closer to the midterms than he is right now. I think right now is just a buying opportunity. You got oversold on the S&P 500 briefly. So this is typically when we look to be a buyer. We buy light. We don't go in, balls deep. We go in light because we don't know what's going to continue or not. But that is typically when you want to be a buyer. I'm not the only one that looks at this like that. Obviously, because it bounced hard from there. On the weekly, though, this is still threatening. This is what I'm trying to say. I'm not saying that the bulls have got this. I'm saying on the very near term, I have a more bullish bias. On the daily chart, I have a bullish bias. The S&P is still bearish on the year. The S&P can still technically be a dead cat bounce. We start closing weeklies above that 21. Yeah. It's going to be pretty hard for me to be bearish. But we close this week out and we take out last week's low, I will get right back into bearish mode, right? That's how I trade the market. I don't care who has control of price. I want to try to anticipate who has control of price. Right now, the bulls are in control of the daily, but they did lose what momentum they had at a very important area. Notice on that weekly last week, we tested the 50 to perfection. So many algorithms hit the sell button on Friday at the close of the market based on this indicator right there. Hit the sell button, or let's buy some puts, because puts were cheaper on that day as well. Puts were cheaper. You had a what? It closed at 22.67. This is just an inside week. Puts closed at 22. They were cheaper. This is also a good area to be a buyer on the VIX. So I'm not saying that the S&P is out of the woods. I'm just saying if you are looking for it to become bearish again, then you need to be looking to put on that hedge at the very minimum. And markets react to Trump to rescind global chip curbs amid AI restrictions debate. I don't know what any of that means. Look at NVIDIA. Yeah, let's go look at NVIDIA, because NVIDIA is very important. It holds a huge weighting in the S&P. So NVIDIA hasn't gotten to that all-out point yet where I would be putting on, an out-of-the-money put on NVIDIA, but it's getting close. We're trading above last week's high. All right. Yes, we're bearish on the year. Yes, we're under the 21 on the exponentials, and we're under the 50 on momentum. So right now, the bears still barely have the momentum on NVIDIA. But that's on the weekly. On the daily time frame, not only do the bulls have control, they have also pushed more in control. So March's open will be pretty damn close. Oh, wait, no, we're closer than that. This 21 exponential moving average will be pretty much like, wait till Friday. If you stay, as long as, okay, let me put it in here. I'll analyze NVIDIA for you like this. As long as you're trading above last week's high, you don't necessarily want to be shorting NVIDIA. All right. Because you're more bullish this week than you were last week, objectively, because you're above last week's high. So I don't necessarily think I would want to short it. Now, if you fail tomorrow, you're extremely bearish. Let's get rid of Q4. We don't need that low anymore. We've already traded through it many times. We do want to watch this price right here. We want to watch this price on NVIDIA. This could be a short opportunity. So when we close, if we close under this, say we get above it briefly, tomorrow and Friday we get above this, but then we fail back under it. Then at the close on Friday, it could be safe to put on a little bit of risk to the downside. But make sure that you mitigate that risk so that way if on Monday you have a massive gap up because Nvidia comes out with some super uber like really bullish news over the weekend, you don't get your account destroyed, right? So if you can't do that, then don't do the trade. But if you can buy an out of the money put, I wouldn't buy way out of the money. I would probably buy around the 115 strike. But I would also buy that out for like at least a quarter. It just makes it more easier to manage that risk. You don't have to see it happen instantly. You can give it time. That way, if you do get the crash, you get back under last week's high, then it's going to look more bearish, right? Because you're still under this down here. And that's important for me. That tells me who's in control of price. But like I said, on the daily, it's the bulls. It's the bulls. Unfortunately, I think you're going to get a daily close above the 60 before you get even into that 21. Yeah, this looks pretty bullish today to me. I mean, yeah, this looks good. So we just got Nvidia news. Got you. To rescind global chip curbs amid AI restrictions debate. I turned my news bot off because the day's over for me. But yeah, that's huge. That's a big move, man. That's what I'm saying, guys. The bears are not in control of this price. Not even a little bit. We're back above old weekly res on Bitcoin briefly here. Thanks for letting me know that, 12XU. I appreciate it. Above news was just released. Yep, I got you. Nvidia's looking good. It definitely is. But we still need to give it, we still need to see how it closes this week out. Like I said, tomorrow, all of this can be faded tomorrow if the market participants take today's news more bearish than bullish. Like they could be selling into this right now. That's why I'm not going to be a buyer on Nvidia way up here. We're at the weekly highs. I'm not doing that. Here's Monday. So you're literally making fresh weekly highs right now. I can't be a buyer up there. I can't be a seller either, not with this much momentum. I have to wait and see how we close, where we close in regards to the weekly 21 and the 50 on the RSI. Then I can make some decisions. But here's the thing. If the overall broader market is like breaking out above the 21, do I necessarily want to be bearish on Nvidia at that point? The answer to that's probably going to be a firm no. Yeah, just pointing it out. I appreciate it. Yeah. Any other questions? Google's having a rough day, so I'm assuming they got beat on earnings or something. I mean, this is a big day, man. Damn. No, they already had earnings. I don't know what this is, but that's big. AI stuff. Thank you. Yeah, I generally don't pay attention to news that much. Yeah, now see the difference between Apple and the overall market. Apple looks more bearish, right? Like it's already done its little, it was a much weaker test, but you still have a higher low here. It's not a monthly low though. I bet it's a weekly low. Well, I know it's a weekly low. That was dumb. So this low is going to be important for me on Apple. If we take this out, it's going to look really bearish. Apple, I don't know if Apple is still the leader in the S&P. I think it is, or Microsoft is. I think since Microsoft got a big boost on earnings, I would say Microsoft is probably the leader of the pack once again. And there's the bell. The market is closed. I'd say Microsoft is probably leading the pack again on the S&P, but Nvidia and Apple still hold a very huge weighting. As long as this area holds a support, you can see how that wick almost ticked last week's open. If this access support and next week we take out this week's high, that's going to look like a pullback buy and probably shooting for a higher high on Apple. If we lose this low, then I don't think that's going to be the case, because then you will have it won't be a monthly bearish engulfing, but you will be engulfing that range, that bullish range there, by taking out the low. So all the gains that you made this week will have been more than retraced, and that won't be a very bullish sign. Yeah. I would say, yeah, I'd probably wait on this. I don't like double bottoms on intraday price action. I mean, they can hold clearly, but that looks like a bearish target for me, but I wouldn't take it. I just would like to see it liquidated, but it doesn't have to. This could literally just be where people decided to hit the bid. You guys have a fantastic rest of your day. We'll see you guys tomorrow morning, and we'll see how tomorrow goes, and hopefully we'll have a better outlook on what's going on in the marketplace. Right now, it's at a critical area, and I would love to see us blast through that critical area and never look back. I think that would be fantastic for most people that are holding retirement plans and 401ks and whatnot. Obviously, they want to see all-time highs again, and I would love to see that for them. You guys, make sure you trade safe, trade smart, and as always, happy trading, everybody.